9:01 a.m. 4/27/2016. We are looking for the short NCM June 2016 1-minute chart. Preferred entry is 81 and 50. It's 81 and 50. Accumulated volume is dominating to the downside. Small long just came in for close to 275, holding the current level. Short-term defending at this point. Setup on the 15s and 5s is fair. Indicator formations are somewhat varied because of the high volatility in the trading channel that existed from the early AM session onward. CD holding to the downside through the latest floor, positive. There's another 350 sold short. Another test. CD confirms. Another down tick. Just about there. CD down again. 5s are real strong to the down. 15s are now clear. Targets 2080.75, session low 2080.25, 79.75, 79.78.75. Stand out is 2081 for 668. Copy that, Mark.
Copy that.
Up a tick. MTM is 81.75. How many contracts would you be looking for in a spike to get through?
At least 500 or so. I see like there's a persistent order in there.
We can hold on that. Volume's completely dried up. In the last 40 seconds, anything long or short should move prices. 61 just traded long. 1 minute FEMA is way down. Minor uptick on 5s, MFI, CMF. Another 105, now 120 shorted. 1 tick range. $82.25. Now 2 ticks up from the preferred entry. Well, let's see how prices react. The gap is closed for the session open or not.
Minor upticks on 5-minute money flows. We're still heading up in 5 second.
210 just traded long.
Yeah. You're back up to the ledge, to the step. 28.225.
What's contract sizing at that step?
9.8.
Copy that.
Then above that you got 16.3. Below it you're at 6.2.
One minute PM up, negative 43.19 as compared to previous configuration. Minor uptick still present on MFI and CMF on the 5s. The odds of this move following through to the downside are greatly diminished at this point because of what the in-the-moment indicators are saying. If one was short at the preferred entry price, one would have been out at the 82 level to mitigate the risk before prices have a chance to get back up to the session open where they just touched on right now. Now, the setup is still between the end of the analysis and the real-time charts, still set up to be short. This movie just hasn't followed through yet. So in this case, we'll be looking for the preferred entry to get dropped down a tick, fly in the next 1 minute level, which is laid out by 81.50, these two prices here. And if they do follow through with more volume, then the new preferred entry is 81.25 for the short, same targets identified to the downside. As long as prices, in my mind, Mark, they don't trade through, close through 82.50, this move could still go, and there's enough time. It's 9:08.
Yeah, understood.
What do you think?
Yeah, no, I actually had a stop placed underneath here to sell it. I moved that tick because I wanted to see if volume was going to come in or not. Not right at the preferred entry, but a tick below it, so that I'm not going to get hit and take, you know, hit and the order get filled without actually going through that level. You know, like, because that's what's happening. You know, we're going to get down to the preferred entry and orders get filled and it's not going to move.
Copy that.
Well, I want it to be moving as it goes through this, just because of what the price action the way it is. It's coming back and we're through support again. We have longer term support going back to 448 Eastern on the CD. That's the floor we need to really be through in terms of the CD.
What's the timestamp on that?
448 and 42.
448.
That's on a 300 tick. Yeah, that's on my charts, which is a 300 tick.
I've got 446 and 24. Close enough. Yeah, we got a match. Yeah, I see what you're talking about. You have an open and close. You got something at 4:43 and 36 seconds, and then 4:46 and 40 and 24, somewhere around there. Yeah, good. We are still on tape. No cuts so far. The downside volume still dominates. Prices never closed at 82.50 back for the session open. So with the turnaround here, long-term holders could have remained short and looking for the follow-through now on increased volume at the 81.25 new preferred entry price. CDs through the existing floor here, and then looking to get down, correction, through the floor here, and then looking to get through the most recent by these two ticks, and then here what you referred to earlier in order to be short. Ever since the POC has been traded off to the downside, this indicator has continued to move and stay down. Positive for any probabilities that this trade can still follow through. 134 is traded long. some odd, 15 seconds left in the current 1 minute bar. See how this all plays out. Whether we get a close at the session open or not. There you go, 210 traded short. Staying off of that.
$500, close to 600 to get through here to get to the below this next level.
Missed that, say again.
Needs 5 to 600 to get through this next level at 82.
Have a short-term positive divergence on the CMF that could be taken out. It's drawn from 640 to 855.
Copy that.
SMI leveling off below -50 and MACD losing some momentum. 15s are still pretty good. And now you have CD, which is up below previous resistance, right? Drawn from 902 in 30 seconds. So the likelihood of the price is closing now at 82.50 become greater. Strong positive divergence on the 1 minute VMA. $700 to 1,000 contracts traded short to get off of this last step. I'm thinking this is maybe what we need in order to drive it down.
That's what I'm figuring. There's going to be just a big bulk trade come in here that's just going to knock through it. So it might, the initiation of this may be really quick.
Right. Well,
go ahead. Sorry, go ahead.
No, you go.
I was going to say, and after that, it should be sustained. If it happens, before market open.
Right.
That's my thinking on it anyway. But we may not even get to that point.
Yeah, there could be a flash run, all the way down to the daily, even below the 15.
That's exactly that's what I'm focusing on. Right around there, you got yesterday's low as well, one tick below that daily at 79.50 for yesterday's low.
Woman female is up again. Testing resistance. It's drawn from the peak established back at 846. Yeah.
Now I have a 5-minute SMI crossing in play.
Yeah, so at this point, the likelihood of the follow through and getting off of 82.50 to trade short becomes, it's meek. It's real weak and meek. There you go. And it's because of the intermoment indicators that we're looking at. If anybody who's watching this tape, this happened way back here. Positive divergence as compared to the price, lower price, higher price, lower price, much higher indicator level. Indicator pushes up, takes out the peak, takes out this peak here, and leaves the way for the prices to go ahead and trade up. Plenty of time to get out of this with a small loss after the original preferred entry here was taken. Now here's your short coming in for 600 to defend. Look at that, to defend 82.50. So that can change things rapidly if additional volume comes in. But even at 600, unless this bar closes out at and more volume comes in at 82.50, it's not likely.
That volume was enough to move the POC down to 82.50.
Copy that.
You got 17.531 at 82.50 and 17.290 at 283. So any movement back up will put past 283. Will probably move it back up there again. But that's where it is right now.
Okay, so today's example is clearly on how to manage the trade if the trade had been taken at the preferred entry and plenty of time to get back out of the trade with a minimal or scratch after it went short. The smarter money would have been short a little lower here and looking for a spike down to the daily level. The incremental volume is good, right? Backup spikes here, 6 and 5, looks like 560. They probably just took out everything that was right above the session open. So in essence, the session open is still defended, even though closed above. So they could take this out, and we'll see what happens. Probably now at this point where it's 918. This is probably not going to happen until after the market opens. Mark Sell and Jeff Killian for the Vector Traders Consortium, running down the analysis thought processes in the room this morning, and we will pick it up on the next tape.
That's why you're going to have to see more than 800 to get it.
Okay.
Now, I did have an order placed a tick below this, but I've moved it because I've just because of the time.
Okay.
I've cancelled it.
Okay.
So you're going to see like 700, if this order is going to go, you're going to see an accumulation of 700 contracts. You look at your fives, somehow we've got to burn through 700 or 500 of these orders I'm looking at here are pulled. Like they're not going to, they're basically, they're not going to fill. But right now they're going to fill.
Okay.
So I'm showing back up. Here we got 500, 750 contracts now. It's sitting at this level, supporting.
Okay. Supports.
And they've already above that. We've already sold. We've sold 500, right? And now we've been supported with 800 underneath, and it's turned around.
And so when you say it's supported with 800, you mean there's 800 buyers there that are sitting there to buy?
Exactly.
Okay.
800 contracts waiting that have to be bought on limit. You have to go through your limit orders before you can, with market orders. You got to take those limits out first before price can move down.
Right. All right. Mm-hmm. Right. Okay.
There's 400 coming in out of that right now.
Yeah.
And there's still 600 in here. And filling back in again.
Look at the CD, how far down it's just shot on that volume. Okay, down to here. And a minor uptick. Has your upside, 275 right here. Downside volume still clearly dominates. Temporary defending of the preferred entry here at 81.25, right?
See, this is why I was worried about. I'd already be in this trade, and I'd be, I'd have gone maybe a quarter point to half a point the wrong way. But every level here now is being defended to the downside. Like they keep getting orders coming in. No big order has no. I mean, look back at your 5 second stuff. There's nothing like 1,000, 1,500 to say we're getting out of this, which is what it's going to take to get out of this.
Right.
In my opinion.
There you go. There you go. 326. See these down. Write that. Copy that. So look for the flash run down to the daily bang, 2079.75 or 80.75. If it doesn't follow through, it's quite as far. Right.
So we've got 1,200 contracts defending this now.
Mm-hmm.
This is what I'm seeing.
Fives are good. Minor uptick on 15s on the CMF. Now net neutral. Defended with 2 1/4 plus 76. All you need is one solid spike. There are obviously more contracts that have been sold and bought. The raw data proves that out. So this is supporting what the prices are doing and the possibilities of them continuing to follow through for the flash down to 2079.75 if it's going to go that far, right? There's still enough time. It's 9:26, dicey, right? Dicey, but you never know. If there is a flash down to 2079.75 or 2079.50, let's say, hypothetically speaking, right, then that could be the probe even after the market opens and trades up, right, for where prices should go. Now you got it. There it is, 80.75, 350 traded. CD confirms that again, right? And
right, copy that.
there you go. Okay. Now, I took a lot of heat on that one because I felt that I was right. And there may still be some more out of it. You might get the flash down to 79.75. Copy that.
Yeah, I copy that.
All right.
We're so close to the market open, though. Is there a point where you say I'm not going to take anything because it's too close to the open?
Yeah. Yeah. It's like we're here at the 15-minute level with the session low. I felt that that was a better area to get out. And here you are. You're looking your tick away from
go to the tick above, yeah.
Exactly what we were just talking about. So there it is. So there was two different choices. Now you're hitting it. So this proves out everything we've just been talking about and analyzing, on what can happen just before the market opens. So between trade number 1 and trade number 2, now I'm up to 562.50 here. I got out at 80.75. Took a lot of heat on the up. Worth it. I'm good with that. Copy that?
Copy that.
Yeah,
4 ticks there.
Here you go. Executions. Now we are.
That's exactly where we said it was going to go.
That's exactly where we said it was going to go, yeah. So, Mark, we're going to roll this tape up. I think this is something that we should definitely get out to the world. Let them see it. Let them hear it. Touch it and feel it.
Yeah.
So let me ask a question. So we were sitting there waiting for more volume, like 700 to 1,000 to come in. We never got that unless you
did cumulatively. You did.
Okay.
I can see getting through the level. Say what was that timestamp? 8:22. 8:22. From 8:22, we were at 32.50 to get through that level. 32.50. We ended up down close to 2,000 contracts. That was net short.
So in conclusion, if you don't get the singular spike, you're working off of the accumulated volume at or near a certain level in order to get through it or get off it. So we're on recording here. We're going to cut this off here right now. It's now 9:29. Market's going to open in just a few seconds. Mark Sella, any final thoughts before we finish up?
No, that was pretty good example there of everything that we've been talking about and waiting for the trade and getting in at the right point if that was your risk tolerance and where it was likely to tap out, spot on.
Right. And I don't think we have any breaks in this recording either. So from stop to finish, in real time, exactly as it happened by the VTC, by the Vector Traders Consortium. If anyone is a serious student of the market and seriously interested in what they can do to replicate what we just ran down, you'll need to go to the website and fill out the inquiries form. Once again, our pleasure, 9:30 a.m. We're out 4/27/2016.